Welcome to the YesOption Weekly Analysis. My name is Cassandra Noy, and here's the latest for Monday, April 7th. The trading week kicked off with markets closed in China for a national holiday, so it was a subdued session in Asia, which saw stocks drop following Friday's U.S. declines. Markets were reacting to the news that the U.S. economy added 192,000 jobs in March, below expectations for jobs growth of 200,000. While the data disappointed investors expecting a more robust reading, it indicated that the Federal Reserve is likely to stick to the current pace of tapering to its asset purchase program. In the currency markets, the euro-dollar closed the week down just over 0.5%, hitting a 5-week low after the ECB left interest rates unchanged at 0.25%, and Mario Draghi revealed that the bank discussed the possibility of negative deposit rates. In a week full of heavy events, the Canadian dollar ended up being the strongest currency of the week, rising to a 5-week high against its American cousin after the Canadian unemployment level surprisingly fell from 7% down to 6.9%. The introduction of the Japanese sales tax helped push the yen to a 10-week low against the US dollar as risk appetite continued to be underpinned by hopes that China will introduce economic stimulus measures to boost growth. In the commodity markets, the weaker-than-expected jobs data helped send gold up 1%, meaning a weekly gain of 0.70%. Crude oil posted its first weekly loss in 3 weeks, down 0.52%, despite a 0.85% rise on Friday on Chinese stimulus hopes. The weekly decline was due to supply levels and increased output in Libya. Warm spring weather overshadowed Russian gas supply fears to send natural gas prices down to an 11-week low, falling at 1.06% for the week. In the stock markets, a correction in the technology sector sent broader U.S. stocks plunging on Friday as investors jumped to the sidelines to await earnings release this week. Nasdaq saw the largest single down day since June 2012, shedding 2.9% by Friday close, with the S&P down 1.8%. European stocks continued their 3-week rally, although declines have been posted on Monday morning following on from U.S. and Asian market falls. In the week ahead, markets will be focusing on Wednesday's minutes of the Fed's most recent policy-setting meeting. Monetary policy meetings by the Bank of Japan and the Bank of England will also be closely watched. We expect stocks to continue to decline, while investors should look out for the earnings results of General Electric and Caterpillar, as these are usually regarded as barometers of how the economy is doing. Warm weather forecasts for the next 15 days should mean more falls for natural gas, making put options there a sound investment. Oil traders will look ahead to OPEC and IEA monthly reports, and we expect crude oil to find support at $99.07 a barrel, the low from April 3rd and resistance at $101.97 a barrel, the high from March 31st. While in the currency markets, expect stable trading in the lead up to Wednesday, with possible declines for both the Aussie and the Kiwi, with technical pullbacks expected, making put options on both seem like a wise call. Remember, at YesOption, making call and put options can generate returns of up to 89% in as little as 60 seconds every trade. So start trading today. That's all from me, Cassandra Noy. Be sure to tune in same time, same place for the latest YesOption Weekly Analysis. Goodbye for now.